Good morning, America. Hubert Johnson here with Taxes Made Easy. Got a interesting topic today. So I got a call the other day, and I was talking to a gal a lady who had issues not only with the IRS but with state taxes. And unfortunately, what happened is that she was working with the company that only did the IRS, and they ignored what was going on with the state. Now, when we talk about the states being more aggressive, it's absolutely true in many circumstances. So while they were working with the IRS, the state was being ignored. She had her driver's license suspended, and now she can't work. So again, this is a very serious situation, and want to talk about what do you have to be worried about with the states, and how do you make this work for you, not against you. So stay tuned. We've got a lot of great news coming up, and we'll be right back after this break. Welcome back, everybody. I'm here at Guardian Tax Law. Just a lot of news in the day. The biggest piece of news, if you haven't heard about it, and this is actually breaking news. So this is focusing on what's happening in the world a little bit. Um, so Israel has decided to go into Rafah, the last Hamas stronghold, and finish them off. And what triggered this was Hamas has been attacking Israel with rockets this entire time. The whole time that people have been calling for a ceasefire, Hamas has not been acting like it wants a ceasefire. They've been launching attacks. They've been causing more problems. They have failed to release hostages. They've been killing hostages. And you can't really negotiate with someone that's killing hostages, and especially with someone that goes and rapes, murder, tortures, and kills civilians. Um, again, let alone all the human rights violations they committed against anybody they capture. That again, what they're doing to civilians is beyond the pale. So, due to the political pressure, especially from the Muslim community, in certain states like Minnesota and Michigan, President Joe Biden just announced, first of all, he withheld one shipment of bombs to Israel. Now, he doesn't want them going into Rafah. I don't know why. It really looks like this is just to help him win the next election. But this is really, really bad for our allies, for the United States, that as soon as it becomes politically inconvenient, that we'll ditch allies. And now he's saying he's going to hold up all shipments. So everything they've bought, they've paid for, that they're relying on to finish taking out Hamas and provide peace to the Palestinians and an opportunity to raise their kids without being brainwashed and taught to be suicide bombers. Again, the idea that Hamas can survive, or is supposed to survive in this situation, begs the question of how do you deal, and this is the problem this whole time. For decades, we've been trying to make it work and suggesting a two-state solution, but when you have Hamas, the PLO, they've never acted in a civilized manner. They've always encouraged terrorism, suicide bombers, etc. It doesn't matter how kind Israel is, because you have Arabs in all parts, even in the Knesset, even being represented, and it's not a you know it's not an apartheid system. They've had all kinds of accusations leveled at them, but when you actually get to know, Muslims participate, they vote in Israel, they do all that. So by withholding all ammunition, if they go into Rafah, it's a clear sign, not only to Hamas, but also to Iran, that now they can attack Israel with impunity, and the U.S. will not only not have their back, but they will prevent them from resupplying with munitions that any country would need. So he's kneecapping Israel at a very important moment here. Um, what will really happen? Israel will get the munitions. They'll just buy them from somewhere else and learn not to trust the U.S. And this is the same mission, message being sent out to other countries, like Saudi Arabia, that would dare rely on the U.S. that if it's politically expedient, they might not be able to rely on us. So it's a very dangerous message being sent out. Moving on, we have some tax fraud cases. So you have an East Bay entrepreneur, and I'm just going to run right through these. This is from KRON4, local news station. The previous article was from townhall.com. So this is interesting, where this gentleman had 3 businesses, overstated his expenses and understated his income to the tune of $1 million a year. When you're dealing with numbers in that size, the problem is that doesn't make a lot of sense. The IRS sees transfers of money of more than $10,000, and it clearly shows that he's been making a lot more money than what he reported on his tax return. So there's plenty of flags. When you're making that kind of money, you're probably going to get flagged for an audit. So again, he he allegedly filed false returns for 3 years for him and his wife, and now they're facing criminal charges, going to jail, and the penalties can be up to 5 years in prison, $250,000 fine, and restitution of $438,000. And here's the problem: when you have these kinds of penalties for fraud, you can't just do an offer and compromise on it. You can do a non-collectible status or an installment agreement, but if it's done for fraud, it's treated very differently. So not only does he get to serve some time in prison here, it's going to be pretty nasty for him. And also in the news, another clear example of tax fraud. Famous baseball player Shohei Ohtani, and I'm probably butchering that name a little bit. So again, this was a very famous player. All the teams were trying to recruit him. The Giants were trying to recruit him, San Francisco Giants. But eventually he went to the Dodgers because they had more money, or offering more money. And then it comes out that one of the employees there, was his interpreter and worked for the Dodgers, had access to the baseball players' accounts, was supposed to help manage the accounts, and he skimmed off $17 million from Ohtani's bank accounts. So he's pled guilty to 1 count of bank fraud and 1 count of filing a false tax return. Basically, anytime you get money, you don't report it, they can always slap on an additional charge of not filing a false tax return. You got the money, you didn't report it. Again, it goes back to Al Capone. Even money that you make criminally needs to be reported on your tax return, or you can get hit with tax fraud. And so that puts criminals in a catch-22 if they report their money. That's why money laundering is so important to criminals, because if you don't show some legitimate way of making the money, they're going to question, where is all this money coming from? So, again, this started back in March, but here he's pleading guilty, and again, anytime you have assets, especially if you have a business going on, it's not, I don't know why people think you can just not report massive assets like that, or that nobody's going to see it. So this is where a lot of people, you might be able to steal it, but hiding the money, what are you going to do with it? That's where things unravel for a lot of criminals, and good. I'm glad that it is hard to hide money. So, and then it's being made harder and harder, but again, the trade-off is you get more Big Brother from the government. So, interestingly enough, And I think this really goes, we're going to talk about the Fed a little bit. You know, the exciting news for the Fed. Shared an article the other day about the Fed president for New York saying, oh, we want to cut rates. We can't do it now. We'll see when we can do it. And this is why it's so confusing. So this is Neil Kashkari, someone else, and he's in Minneapolis. So here the Minneapolis Fed Reserve President Neil Kashkari said the central bank will need to hold interest rates for an extended period that may last through the rest of the year. So again, this is not what Wall Street wants to hear. It's not what investors want to hear. But he's saying, look,
as our call all year has been, you're going to see the Fed that
you have to look at the inflation data needs to support this. You need to see multiple positive inflation readings.
As investors continue to extrapolate as to what the next move is.
Decreases in inflation have largely stalled. Inflation is still high, well above the 2% rate that the Fed wants. And then some other things that he talks is that the labor market.
We have to take a step back and remember this.
So you have weaker job creation, and especially with full-time jobs that have either been stagnant or actually have declined. But again, he's saying, look, the news, the economic numbers are not out there. It's just not there to support another Fed cut. And when all these presidents get together, then that's when they make the decisions. Are we going to cut rates, or are we going to keep them steady? You have one person saying, hey, we can't now, but we want to cut. And then there's two others saying, probably not for this entire year.
Absolutely. But yes,
honestly, the more as we continue spending money, I believe inflation will continue to go up.
Not look for a seat, but look for the exit.
That's just,
my dad. Oh my God.
You throw more money, you just create more money, you overspend like crazy. That's what's going to happen.
And I agree with Tim 100%.
It's just a natural consequence. And so personally, and there's plenty of other economists that have said this. You're not going to truly tame inflation until we stop overspending and
so the market, yes, climbs this
digging in deeper and deeper hole with the
but bad news is good news
with the U.S. budget, with the deficit.
An economic
so the national deficit is higher than ever. And so, again, this is still a 23-year high of interest rates. But again, the last 23 years, since 2020, we have artificially capped inflation low.
On your money if you're
and that starts with George W. Bush.
Well, Buffett just sold his
blame him
Apple
for part of
stock,
this
at least a bit of it.
So everybody likes cheap money, but cheap money can hurt.
Easy peasy
and we're still
in treasuries.
Dealing with the bubble
Is it as easy as saying, just look at good companies
artificially lower inflation rates, thanks to, of course, the Fed that went around, along with the politicians that wanted
about 0.25%. It unveiled a
so,
whole suite of iPads, an 11
again,
then a kind of a
little bit more here, but that's the main thrust of it. It's very confusing. How do you know if they're going to cut, when they're going to cut?
Or do you
I would say
go in for some of the mid-cap
more likely than not.
Well, I think from an investment strategy standpoint right now, there's a couple things that are
not anytime soon.
Number one, we think it's important.
The job numbers were really bad.
That has been driving
economic growth is stalling. It's still less than inflation.
This year.
So
the next
wage growth is actually declining because real wages are going down
across the country. Everybody is looking
due to inflation, and the growth in the economy is just not keeping pace with
something that is not
inflation,
going away, regardless of what happens in the economy. And this next wave
so
of growth
speaking about inflation,
infrastructure companies. So think semiconductor.
Another article. This one is from the Daily Caller. How bad is it to force businesses to switch to EV trucks? So, if you've ever heard, if you like your food, if you appreciate having things, think a trucker. Trucking is so important for any country, but especially ours because of the distances involved. You know what? And I'm up against the break, so we're going to have to cover this when we come back. Welcome back, everybody. So, sorry, ran over a little bit. This next article is talking about EV vehicles for trucking. So trucking and shipping by trucking is so important. Anything you go buy at the grocery store, at the mall. Again, if you want to talk about Amazon, Amazon relies on shipping. So again, either by plane, large trucks out to the distribution centers, and then smaller trucks to deliver directly to your door. So all kinds of shipping and trucks involved in the distribution of goods in our economy. We're really spoiled at this time where sometimes most shipping can be for free, especially if you have Prime or if you just buy over a certain amount. And again, expect those costs to go up quite a bit. So the Biden administration passed regulations, and what they're saying is that you have to go zero emissions by 2032. That's in 8 years. In 8 years' time, and again, I like how they put these out far enough out that they'll definitely be gone. But then someone has to reverse it, or it's going to cause massive, massive pain to the economy. So if you have a light duty van, like a transit van, going to a light EV, would it be at least a 5% increase in cost per year? But going over to medium and heavy duty trucks would 114% cost per year to businesses that are already struggling. Especially with gas prices going up, regulations coming out, the attacking independent truckers more than anything else. It's become harder and harder to survive and recruit truckers. But at the same time, this is going to double the cost for medium to heavy duty trucks. Our economy relies on this. So what's going to happen to these costs? It's all going to be passed on at the grocery store. Whenever items are delivered to you, it's gonna create a lot of problems and increase costs throughout the entire economy. So again, the article continues that there's some applications where EV adoption makes sense, but not everywhere, especially for heavier duty vehicles where you're hauling a lot of equipment. It's going to really hurt the market. It's going to hurt consumers. And again, this is going to really make your businesses fail. So again, the potential inflationary impact is measured between 0.1 and 0.4. Again, it's going to be much worse. These are very, very tame numbers. So it costs you 94% more in California, and a 501% increase in equipment costs. Well, the cost savings on fuel only adds up to 52%. So again, it's going to hit different states differently, but again, this is every time you make things more important, you hurt not just truckers, but you hurt everybody buying the goods that are being shipped. So again, it's counterproductive. It doesn't help, and when you go after taxpayers, when you go after consumers, again, even a small subset, when you make it hard for one part of the economy, there's ripple effects throughout the entire economy. And trucking affects everything. It affects all goods and products being delivered. And so I would expect all those costs have to be passed down because these companies can't just swallow those costs. The smaller ones, smaller independent truckers would be forced out of business. And then it's just going to cause that much more increased costs and hurt everybody through the process. So again, this is from the Biden administration, and this is from a Fox News article citing a CNN video from President Biden, claiming we've already turned it around. The polling data is all wrong, has been wrong all along. The economy's great. I don't know what to say to that. And again, he goes down and says he's been creating jobs. But again, due to the numbers they're looking at, it's part-time jobs, it's temporary work, and government jobs. That's what's driving job creation. So if you look at full-time jobs in the private sector, they've declined by about 500,000. That is not growth. That's not a healthy economy. That's a very unhealthy economy, which is why most economists and most of the Fed presidents are looking at that and saying, no, not only did you have low job creation, most of the job creation was, again, with part-time work and government work. And so again, with more government spending, more government hiring, that just adds fuel to the fire and, increases the national debt, which again, it's the only way you do that is by essentially printing more money by borrowing and borrowing more than ever. And then he claims that we're bringing down inflation. So from a high of 20 of last year, they're claiming that the numbers this year have been lower, but inflation is still high. It's just not at as bad of a rate of inflation as before. So we still have higher inflation than growth. We still have a lot of problems here. So he's saying because the rate of increase is slowed down, that we've succeeded and the economy is doing better. This is pie in the sky thinking. So again, it just goes back to the costs. He's questioning CNN and their polling methodology, and still claiming that his administration's record on the economy is all roses. Again, I think you're not going to see any change. They're going to continue doing the same thing throughout the Biden administration. It's going to be, why would they change if they think everything is going along hunky-dory? So just to kind of highlight this, here's another article. This one is from the Washington Examiner. And one of the things that's really hurting small businesses is theft, retail theft. And again, this is now they're talking about banning self-checkout machines in California, because that's going to solve everything. So it's a new bill in California, hasn't passed yet. But again, this is another idea that if you get rid of self-checkout lines, it would prohibit a grocery or providing self-service checkout option unless you have one employee for every 2 self-service checkout stations. So and the argument is this is going to curb theft. Here's the problem. It might for some, but most of the thefts are organized by gangs. It's because it's so profitable and so easy to rip off stores now. The vast majority of people, they just walk out. And the businesses don't do anything. Why do they feel they can't do anything? Well, it's because of the light on crime policies in California, where if you go and you challenge someone, you can get fired, you can lose your job, you can be prosecuted if you engage somebody. And it's this idea that you can't protect property, that you have to stand by and watch someone rip you off and ruin your livelihood. So again, that's they're saying, look, you can use artificial intelligence, but on the flip side of this, the Chamber of Commerce is fighting and saying, look, businesses that are struggling, this is going to put them out of business. And they said, the better alternative would be to get rid of Prop 47, which lowered the threshold for a felony retail theft. So get rid of Prop 107 and actually lower the threshold. So right now it's up to $950. And so as long as you have less than $950, the police aren't going to get involved unless you're caught in the act and there's a policeman standing right there. But most of the time they just walk right out of the store. And don't go through any checkout lane. Now, is it very tempting for individuals going through a self-checkout not to be honest and check everything? Sure. I'm sure there's some of that, but the bigger issue, this is the bigger issue. So, it really is making businesses feel you're damned if you do, damned if you don't. You can't, again, if they have to hire more people, it's going to push them closer to insolvency. So, again, a lot of issues here facing small businesses, facing companies. There's no silver bullet. If anything, the silver bullet would be, actually arresting people that steal. And the problem is the police are still being attacked, and the media, they're still being attacked by protesters. A lot of the pro-Hamas protesters have attacked, hurt, injured police officers, and many of them are being outraged as charges are not being pursued by liberal DAs. So, again, none of this helps the economy. I'd love to point out and say, hey, this is turning great. Hey, interest rates are going down. Taxpayers are hurt every single day by interest rates, which is why, again, I've changed my opinion and my advice to many people that if you have the funds, get rid of this tax debt. It's 8%, a year, and now they've made it so throughout the tax year. Right now, we're past the first filing deadline for estimated tax payments. This next one is coming up June 15th. If you don't have that date, you're going to get hit with another penalty. So it's important to pay by these estimated tax dates, get the information in, and understand what you need to pay, because they're charging you interest in the current year because it's a pay-as-you-go system. Usually it's all due by April 15th, but they do require that you pay throughout the year before April 15th to make sure that you don't owe. So penalties and interest have gone up substantially to match the inflation rate throughout the year. So the topic for the day is dealing with these state taxes and when you have a state tax and a federal tax at the same time. So it's two completely different cases. They don't talk, they don't communicate, well, a little bit. When they do an audit or when one gets money or if there's a refund owed to the state or the IRS, they will send that money to the other party. So if you have a refund with your state tax return, which you owe the IRS, they will do an offset and they'll have to notify you of that in advance. And they'll just send the money. Instead of to you, they'll send it from the states to the IRS and vice versa. So why is it so important to deal with both? So when I introduced the topic, someone had called in. They had this company working on the IRS for a year and a half or so, or going on 2 years. And still trying to set up a resolution and finalize things with the IRS. And they might be doing everything right with the IRS. I don't know. But cases can just take that long. But in dealing with the IRS, they ignored the state. In this case, it was the state of New York. So the state of New York has levied her wages. They've hit her bank accounts and suspended her driver's license. Now, she was unemployed for a while, so again, they didn't have much to go after. But then she got a new job. And it's a dream job. It's a job she wants. They'll let her work as much overtime as possible so she could really make some money here. But she has to have a driver's license. That's the caveat. And so she thought it'd be easy to go in and get it fixed and get straight with New York, and it's not so easy. So and again, I've seen this recently where someone else had a driver's license. It was suspended with New York, suspended for years, and now they need some more money. The wife's income isn't where it used to be, but also to handle all the increased expenses in the economy, people are going out and trying to get any kind of work. And the easiest jobs to get are part-time. So again, I see this plenty of times where people are holding multiple jobs and doing more part-time work just to make ends meet. Don't ignore the state. That's my big message. If you have someone that only handles the IRS, and that's the tax professional you're working with, find someone that handles both. A lot of times you have to find someone local, but there are firms, ours, Guardian Tax Law, we handle IRS and state taxes in most states. The only states we can't handle where you have to be local is Oregon and Washington. And that's because they mandate that you have to be a local CPA or attorney to handle state taxes in those states. Every other state, province, is not a problem across the country. So just Oregon and Washington are a little special there. Again, they're protecting their own businesses and entities, but at the same time, they're hurting consumers that don't have options and they have to use someone local, whether that doesn't matter how good they are or not. Now, how do you know if there's a state issue? Usually letters have been issued, usually information has been put out there, but if you haven't, if you have any suspicion that there's a state issue, get it checked out. We don't charge extra just to do a quick power of attorney. If we're already doing a case with the IRS, we frequently will get a power of attorney and just look at the state case and say, hey, is anything going on here? So if you have any issues, if you received any letters, if the state has ever come after you, the state taxes can sit there dormant for years, if not decades. And that's because their tax debt can sit around for 20 years. And again, time period can get extended out. So with the gentleman trying to get a CDL, he has tax debt going back as far as 2003. Now he owes for some newer years as well, but 2003 is still around, still haunting him and causing problems with his life in 2024. So again, it's really old issues that need to be addressed. This is why it's so important when you leave a state. I've talked about filing a non-resident return. When you want to make sure everything's wrapped up and settled when you move from state to state. A lot of people think, well, I didn't have enough income, I shouldn't have a filing requirement. Doesn't matter if you have a filing requirement or not. They can still cause plenty of grief if you don't file that non-resident return and say, I'm out of here, leave me alone. If you file that non-resident return and then they go to try to do something, California is one of the worst when it comes to this. It leaves you open. They can file for you in the worst way possible and make up income. It sounds like a nightmare here where the state will make up income or assume that you had income. California is not the only state that does that. They're just the most prominent and most abusive of this loophole. So don't forget the state. Don't forget to deal with the state. At least look at it, see if there is a problem. And if there is a problem, let's deal with it. Let's deal with it head on. So we're going to continue the conversation after this next short break and dive into how do you handle both at the same time. Welcome back, everybody. Thank you for watching Taxes Made Easy. Here we're focusing on making state taxes work for you when dealing with the IRS. And it absolutely can. You just have to, first of all, engage with the state, not ignore it. And it's easy to ignore because a lot of times the state taxes are lower, much lower than the IRS. Not always, but typically they are. But that doesn't mean the states are any less aggressive about it. So again, they will get in there and surprise you. They can issue warrants, tax warrants that'll be issued by the sheriff. Have the sheriff actually come to your door. They will issue bank levies, wage garnishments, just like the IRS. And some states actually suspend driver's licenses as well, which makes it very difficult for people to function. So when you're looking at your IRS financial numbers, if you owe state taxes, first of all, the number one thing that people miss out is estimated tax payments. If you're not paying enough in taxes, you either need to change your withholding or start making estimated tax payments so that you're not going to continue to owe. The last thing you want is continue to have this problem year after year where you owe taxes. So whatever you pay in, whatever adjustment you make, so you're not going to owe taxes at the end of the year, is an allowable expense. Even if you haven't been making it in the past, as long as you start making those payments and you're consistent about them, this can help you qualify for either lower installment agreement or qualify for an offer in compromise, or it can help you qualify for a non-collectible status. And it's so important. If you're working for a company and they're not talking about this, find someone better. If they're not making sure that you're not going to owe the next year, you're going to pay them a huge chunk of money, and then they're going to charge you again when you default and come right back to them. If they're not looking to solve your problem moving forward, help you understand your tax obligations and rights, and not just with the IRS, but with the states too, look for someone better. Because that's how you end up right back in the same situation. And with this young lady, this is what happened, is that they were working on the IRS, not even looking at the state. So not only will they include estimated tax payments to make sure you don't owe the state moving forward, but any state payments if you get on an installment agreement with the state. In most states, they have limited options, but if you set up an installment agreement, you'll get the full amount or a partial amount depending on what you're doing. If you're doing an offer, they might try to do a percentage and only give you partial credit, but it will help your case with the IRS. So those two aspects of having, and you want to make sure you're protected from state issues as well. Now, if your state has an offer and compromise program, and this depends on the state, some do, some don't, some are better than others. But if you do an IRS offer and compromise, and you get that in hand, you can use that as it's not binding on the states, but it's persuasive that, look, the IRS wiped it out, you qualified for an offer with the IRS, and it is more likely that the state will then go and accept your offer and compromise because you're truly in a hardship here. Now, does that always happen? No. Do you need to do that? No. I've had plenty of offers accepted without doing an IRS offer and compromise first. So it really is based on your particular situation. But again, if that's definitely something that can help. And ironically, if you need some more expenses, you can set up an installment agreement with the state, do the offer compromise with New York, and the installment agreement with those state will help you qualify for it. And then once that's accepted with the IRS, then you can turn around, use the accepted offer and compromise with the approved offer and compromise with the IRS, and use that to show the state that, look, now I want to settle the state taxes. Because once you get on an installment agreement, doesn't mean things can't change, doesn't mean you can't do an offer and compromise. And we do that regularly where we set up something to stop collections, buy them peace of mind and time. And then when the time is right, then that's when you go into the state and offer and compromise. Now, a lot of states have horrible offer and compromise programs. It really varies state by state. Will they accept an offer and compromise or a reasonable one? And that's why you have to really dig into each state and see what their how they operate. Now, sales tax is a big issue when it comes to states because they're the ones collecting sales tax issues. So again, this is something you need to be very aware of. Most business taxes that you can close out with the IRS are much, except for payroll liabilities. It's much harder to do that with the state, if not impossible. So if you have an open business and you owe sales taxes, they're going to want you to pay that amount in full over time. They'll put you on an installment agreement. They'll give you time to pay it. But if you can't afford the monthly payments, you're going to need to shut down your business. So in most cases, they're not, especially if it's recent debt, they're not going to give you an offer in compromise. They're not going to give you a hardship status. I mean, you can, depend on the state, but most states don't do hardship statuses. There are some, Illinois, California, that will do it, but New York will not. And there's other states that they just don't do a hardship status or non-collectible status. But as that debt ages and gets older, that's where you consider, especially with New York, doing an offer in compromise and settling the balance. Other states won't even consider that. New York or California won't. Nevada wants some kind of installment agreement or a payment plan in place. But you can, and here's the interesting part here. You can present financials and get a better deal out of pretty much every state. You're going to have to fight for it. So here in Arizona, when someone truly can't afford an installment agreement to full pay the balance, we present financials, we have to argue for it, we have to appeal it, we have to kick and scream for it a bit, but we can get them put in a temporary hardship status or in a low installment agreement based on what they can pay. You can do that with Illinois, you can do that with California. New York really doesn't like to do that. So ironically, New York has the best offer and compromise program in the country, but they don't like to do partial pay installment agreements. You can always do it voluntarily, but it doesn't protect you from any collections or license suspensions or anything like that. So in some ways, New York is easier to work with than other states, other ways harder than ever. But again, New York, they're easier to get through. They as far as states go, I would say New York is one of the easier states to work with, to get things done. And people don't think it. When I tell that to people that live in New York, they're blown away. They're surprised. So dealing with tax liens. So if you have multiple tax liens on a property, sometimes you have to deal with the IRS in New York at the same time. And there's times you might even be dealing with different states, especially if you're in the tri-state area, the New York, New Jersey, Connecticut area, you might have multiple states with liens or taxes owed. So I've had cases where we had one case, it was a sales tax case. They went and they opened tax accounts across the country because they were going to launch this business. And they had hired a company, and they went and they created tax accounts in about 5 or 6 different states. And the client or taxpayer didn't even know how many states had these accounts opened. The business never really took off, but then she was getting letters, especially from California, saying, hey, there's this yearly fee that you need to pay as long as your business is open. And to close out the business, they want you to pay the fee. California, lots of fun. So we went in, we closed out California, and then we had to close out Nevada, Massachusetts, I think it was Illinois. We had to go through these different states and close out all these accounts that were created by this company, but again, they created the mess and then stepped away. And if the business was running, yes, they needed to have those created. But again, it should be done reasonably. And when you do have open accounts, you need to maintain them. You need to have someone on top of them. And when you're closing out your business or shifting directions, you need to have someone get in there and fix them. A lot of times you can do that yourself, or you need to call the collections department, but also the Secretary of State to make sure it's closed out correctly. So don't forget, it's not just their collections departments that you need to work with. You need to work with their Secretary of State as well to make sure that business is closed out, everything's wrapped up, and you're not going to get hit with any fees. So usually that entails filing any missing returns, getting caught up on it and on all the issues, and then either on a payment plan or pay off the balances and then close out the business. Now, one thing I want to mention here is the IRS did this for a while and they kind of backed off of it, and this is using outside collections. Now, outside collections, the nice thing about when the IRS was doing it more, and they've kind of pulled away from it, is that with the IRS, whenever they send a case out for outside collections, a private collection company, you could only set up an installment agreement. And if they didn't have all the years or all the issues with them, you would have to set up one installment agreement with the collection company and then go back to the IRS and set up another installment agreement with the IRS for any years. It just got a lot more confusing. But it's very easy to send the case from the private collection company back to the IRS and then resolve it all with the IRS. So we did that regularly. We just haven't seen a lot in the last 6 months. With states, when they have agreements usually with either an attorney general or different law firms that do collections and specialize in collections, much harder to deal with. You can, and I have sent in financials. I've argued with them, but again, you're not dealing with the state, so it's not as formal as you would think or want. And I have had cases where you had one case with the majority of the debt, one collection company with the majority of the debt. You had a couple years still with the, and this was Kansas, with the Kansas Department of Revenue. And then you had another collections company that had another couple of years. So again, you have to be thorough. You have to make sure that all the years are taken care of, or it will surprise you. My camera just went dark on me. I'm not sure why. But it is, you have to be thorough. You have to make sure that all tax liabilities are addressed and being taken care of, that there are no loose threats. So that's why when you're talking you do your compliance check with the Department of Revenue, you have to be thorough. You have to make sure you're getting good information. And then once you move forward from there, you have to make sure that you're hitting all the right spots, that you're making sure all the tax years are being addressed, and if there's any balances, where are the balances? So in this particular case, we had to set up 3 different agreements. One with the first collection agreement, one with the Department of Revenue, Kansas Department of Revenue, and one with the other collection firm. So it can get very complicated very quickly. Illinois is known for doing that. They do that a lot too, so they'll send out a lot out to collections. And a lot of your states, California and New York, not so much. They're big enough, they're organized enough that they really don't send those out to outside collections. But when you're dealing with other states, be aware of that. The last thing you want to have happen is be surprised by something. And again, these can happen in states that you've left many, many years before. So again, these can get very complicated, especially when you're dealing with business issues, when you're dealing with state issues. Don't forget to check not only under your Social Security number and your tax account under your Social Security number with the IRS and any states where you might have issues, but also if you have any business accounts. So there's times we do a power of attorney for an individual and their business for the IRS, and also for multiple states. So there's times I've done up to 8 power of attorneys for one taxpayer, and if they're married, you have to do one for the husband and spouse for the IRS. In some states, you can put them on one power of attorney, but again, you have to be aware of taking care of all these different aspects. So it can get very complicated, but you want to be thorough. You want to make sure you're not surprised down the road. And again, this is what I'm seeing, and is where people think they've dealt with the IRS. Nobody's specializing or dealing with the states, and they get surprised in a very bad way. So if you have questions, like always, give us a call, 520-485-7371, or go to guardiantaxlaw.com. We'd love to sit down and we do a free consultation and go over your case with you. And if someone else is taking care of your case, that's great. We're not going to interfere with that. I think that's bad form. But if you do have questions, you're not sure you're being taken care of, get a second opinion, and we'll see you tomorrow.